Hey guys, Zix here. Time for the next educational video. We are going to talk about volume profile. I am using TradingView, a free app. Mine is premium, but the volume profile tool is free. And we are going to go over what it is, what all of the acronyms are. I'm sure you've heard them before. Naked point of control, naked PDPOC, and VAH, VAH, and this, that, HVN, all this, that, and the other thing. We're going to go over all that stuff. Explain what it is, how to trade it, and how not to trade it. Me personally, oh wait, actually before we get into that, there is a tool that you can use called the Volume Profile Session Volume. I don't know if this is available on the free, but it is on the paid, where it automatically draws all the volume profiles for you. I guess you can use this. I don't particularly care for this tool because, well, it's messy, right? And it's not giving me the information that I want. So we're going to get rid of that. And I'm going to show you how I use it first. And then I'm going to show you what all the stuff means. And then we're going to get a little more advanced. So I like to use it to do high time frame volume profile ranges. And I like to do individual ranges. So we have this range here. And this is a perfect example of one. When we're going to do it for just the range, we don't want to include the candles that brought us here or the candles that took us out. This is the candle that brought us here. This is the candle that took us out right here. How do we know what candle brought us in and what candle brought us out? We look at the range high and the range low. The range low I have marked as right here. The range high I have marked as right here. Now, some people would disagree with me that this is the high and this is the low. I don't like to look at it that way. I consider the high to be different than the value area high and the low to be different than the value area low. And the reason why is because when it's time to break out, this line and this line is going to be where my confirmation entry is for a breakout. We're not really doing breakouts in this video. That's not what this is about. But this is just how I determine the high and the low of the range to know what candle took us out. And as you can see, this candle is the one that took us out just barely. So we're going to not include that one. We can drag from left to right, or we can drag from right to left. It doesn't matter which direction we go. So when we draw it, you're going to see that the volume is going to drop sharply away the second we go past these lines that I drew. Most of the reason for that is because we're not including the volume over here and we're not including the volume over here. So obviously it's not going to show anything there. There's a little more into it than that, but that's where we're going with this. These lines, this is the volume here that I'm talking about. You can see it's kind of similar to what we have down here. The blue is buying, the yellow is selling. It's not super important. You could technically change, you could change these to the same sinking color and it wouldn't make a difference. I'm not really looking to do that right now, but it's not terribly important, the difference between the yellow and the blue. This line right here is our point of control. What it means is this is where the most volume peaks, or the most volume peaks. That's where orders were filled for volume. What makes that important is if orders were filled there, oftentimes retail and institutions alike, they don't want price to invalidate those fills. So they're looking to keep the price. So they're not going to want it to be, denied, right? And we're going to get into a little bit more of that later. But that's basically why this line is important, what makes it important. Now we have the value, and let's actually label this. Now this is a range, so I'm going to call it a range POC. Some people will call this a local POC. I like to call it an RPOC. Now we have another level here. We don't need to keep these, so I'll just delete them. We have two other lines here. We have our value area high, and we have our value area low. And these are where you see people call them VAH and VAL. So we have our range value area low right here. We have our range value area high right here. And basically, this is the edge of the peak of volume. So this giant peak of volume edges out here, and then it goes into what's called a low volume node, or LVN, here. Now this can be on both sides. It's just a low volume node, that's all it is. And right in here is where we call the high volume node, or HVN, and that's this whole range. This whole range in here is the high volume node. This is where you're going to see the most action, or the most action. Typically the low volume node, you're going to see the price rocket. Typically in the high volume nodes, you're going to see the price slow down and do. Obviously, it rocketed here, but typically you're going to see the price moving a little bit more slowly in the high volume area because it's a little more difficult to go through there. Now these edges of this range are typically going to be very difficult to get through because of the decrease in volume. It's almost like it hits a wall. However, when it's time to break out, when it's time to break through these, you typically see it rocket even more, right? So you saw it rocket past this range value area high here, right? Well, look what happened here when it got past that. Phew! All the way up here, and then bam! All the way back down to the point of control. And then once again, we rocketed right here, and then we slowed down a little bit because we formed a new range. And then there's another thought process that we want to fill in this low volume here, and that's kind of what you see this is. This is filling this in. So do we want to preset an order? If we think the price is going to reverse at either the VAL or the VAH, do we want to go ahead and preset an order there, a long here and a short here, to catch a big swing to the other side? I'm going to say no. You can, but I'm going to say no. Let's go ahead and count. So we're not going to count this one, but let's go ahead and count all the times that would have worked. Out of all the times it would not have worked. All right, so we have one attempt here, and this would have not been pretty, but you might have been okay here. Maybe this is tight, but you might have been okay here. So we'll call that a win, just for the hell of it. We preset along here. We're getting stopped out. Okay, that's too much. We're getting stopped out here. So that's 1 for 1, right? 1 win, 1 loss. We go up here, we preset a short. Oh, we're definitely getting stopped out there. So that's 1 win, 2 losses. We're coming down here, we preset along. Maybe. Oh, no, now we're down here. This is this is pretty tough. I'm going to call this a loss here. So now we're 1 for 3. We come up here, it wouldn't even have hit it. Come up here. Boo, boy. We'll call that a win. 2 for 3. Wouldn't have hit it. This is tight. Yeah, well, you know what? Let's go 3 for 3, right? We're here. We've lost this trade here. Oh, didn't hit it. Okay. That would have been a good one. So what? We're now 4 for 4. Up here. Oh no, we've lost that trade. Oh no, we've lost that trade. Oh no, we've lost that trade. Oh, we didn't even get there. So now we just lost 3 in a row. So what are we? 4 wins, 7 losses. That's not a good win ratio, my friends. That is not a good way. That is well under 50%. You do not want to be well under 50% on your win to loss. Now, if you're doing low leverage, you may have been okay riding this down and back up. But chances are, if you're retail, you're doing 10x or more. 10x leverage, this is going to hurt down here. You're going to be really close to liquid, and you're probably going to be stopping out, honestly. If you're ever even thinking of trading on this line, be prepared for it to wick past, because it's going to wick past. It's probably going to at least wick past, and just be prepared. Either have a set a tight stop loss, or be prepared to ride it, because it's not going to be fun. So how do we trade this, right? If we're not presetting orders, X, how do we trade it? Well, first of all, you're watching the charts, right? You're not just sitting around presetting orders and walking away. That's not how we trade. When it comes back through, so when it comes down and it comes back through, that's when we're setting our orders. Now, again, it's not 100%. It doesn't work every single time. So let's now count how many times that would have worked. Again, we're not going to count this. All right, 1 win. Sweet. Came back in. but it only came down to there, a little bit of a wick. If we're going to call this a win, we're going to call this a win. So that's 2 wins, 0 losses. Okay, we went through, we came back, and we hit, we're okay here. So 3 wins, no losses. Didn't really go through it. We went through here, we came back, we longed, another win. 4 wins. 4 wins, 1 loss. No losses. Right here, that's another win. 5 wins, no losses. Come through here, we made it through. We have confirmation. We won, 6 wins. Came through here, maybe we hit our stop. So I'm going to call that breaking even, right? So 6 wins, 0 losses. We come back here. This one would have been tough, but again, we would have been all right. So 7 wins, 0 losses. This hit the line. It did not go through, so I wouldn't risk it. This one right here, we went through confirmation, went all the way up here. 8 wins, 9 wins, 10 wins, 11. Well, that'd be a small trade, but we'll call them breaking even. 10 to 11 wins, and maybe one loss. By waiting until we go back through the value area high or the value area low and then placing our order. Again, it's probably wise to either have another order just under this line or a stop loss just under this line. Like if you would have entered right here, you may have TP'd here. You're probably going to want it to at least get to the point of control though. So, but then this one went all the way down here. So you could have stopped right there, or you could have had another little tiny little order just to boost you, right? And then it could have went back here. Very rarely is it going to break through, come down, and then do this kind of thing. That's not really, I mean, it kind of did it right here, but not really. But, that's why we have stop losses, is to prevent from that kind of thing. That's how you trade these range things. And then, of course, you're going to be looking for the breakout. You want to be so careful trading the top and the bottom of this range. Because, so look at right here. So around here, this is what we thought the bottom of the range was. So a lot of people, when this price was around this spot right here, they saw the price, or even right here, they saw the price possibly going back down to this low, right? And they're thinking, ooh, SFP. So they're presetting an order at this low. This was the current low of the range, right? Right here. So they're presetting an order, probably super high leverage because they're so confident, and then bam, what did it do? It just punched right through, created a new low, in my opinion, created a new low for the range, and they got wrecked. They're probably 2,500x. They're liquidated down here, my friend. You're done. So you got to be really careful, and that can happen. Even though I have this marked as the range low, it's certainly confirmed now we're out of the range. But over here, this could have went down here, and this could have went down here and formed a new low. So you're going to want to be careful with that too. You can almost feel confident on the way back up, longing this. But again, I don't care for that either. There's no examples of it here, but it very well could dance along the bottom, right? Like if we're going to break down, that is something that it can do. You almost can see that happening here, right? Like we're at the top of the range. I want to short this. Of course, we broke through, but it very well could have looked like it was going to be a great trade, and then did this. So you got to be really careful trading You got to be really careful trading on these edges as well. Just a quick little rundown of how, because if you watched an analysis video of mine, I knew we were going to be breaking out of this range, and we did. If you look at the volume, you can see here, you can see this white line is moving average here in the volume. We were decreasing in volume this whole time, and then we shot up. We really shot up in this range here. That to me, really, we even started kind of like this, right? So this is kind of what told me that we were approaching the end of this range here. But again, this probably liquidated a lot of people. I know I can look those stats up. I don't feel like doing it right now. But this right here probably liquidated a lot of people. A lot of people probably longed this and then got totally wrecked. And then when it came down to about here, probably shorted it thinking it was going to keep going and then got wrecked once again. So you can be really careful trading these breakouts because you want to wait for confirmation. Confirmation would have been it doing this. That would have been confirmation. Here's your entry right there. So this right here, in my opinion, was confirmation of a breakout. Yeah, we had a wick down, which would have been painful. But again, this is the entry here. Not here. This is the entry here. And again, a little bit, but look what's happening now, right? And there's a strong possibility that this guy is going up here. So not that high, but we'll get into that. So that's the range, and that's what all of these things mean. Let's get into the next topic, which is the naked point of control. Now you can have, let's get rid of some of this stuff here. You can have what's called a naked value and a naked value area low. You can have a naked value area high, but we're really just considering the point of control here. So the theory, especially on the daily, but the theory is when you leave a volume range, the price will eventually tap it. So it's naked if it hasn't been tapped after the volume profile range has ended. So this would be considered a naked range point of control. We are already a couple of days out of it, though, and I am of the opinion that the longer the time goes by that you are outside of your volume area profile naked range or naked point of control, the less validity that has. You want to argue me? Let me show you. Let me show you something. Let's look at the all-time. Well, all-time for Coinbase. What is this line? Get this crap out of here. I just picked this chart because it's a Bitcoin chart and it has similar volume to what I need. Obviously, Coinbase is not the original holder of Bitcoin. So let's look at the all-time point of control for Bitcoin on Coinbase. It's $109.87. It's naked. Here, let's move it here. It's naked, right? You think price is going to be $109, or now it's $600, whatever. You think price is going to be $109.97 anytime soon, guys? You think all this volume is relevant back here and through all of this? No, it's not. So if that doesn't prove my point that the farther back you go, the less valid it is. I don't know what will. But let's shrink it down. What do I have here? A line up here. What is this? TA from a long time ago, I guess. We have let's shrink it down a little bit. That's obviously ridiculous. We can do yearly point of control, in which case we would do I guess we would do January to January, right? So let's find January 1st, 2022, and we'll find January 1st, 2021. Well, we've got a naked point of control on the yearly, guys, 47,310. And then we have our value area high here. Our value area high, very low is very low. Yeah, I mean, TA is relative to the time frame. I say this a lot. I say this in a lot of my educational videos. I know this is only the second one on the channel, but you're going to hear me saying it a lot. The TA is relative to the time frame. So if this is a naked yearly, I think we have a year before it's too late, right? So we could get here within a year. So are we trading this? No, we're not trading this. So forget it. So let's shrink it down to monthly. We could do the monthly from the weekly. I actually like to do the monthly volume profile from the daily chart because I want to do February 1st to January 1st. Ooh, easy. And you may ask why we're not using March. Because I'm doing it wrong. That's why. So we're going to use March 1st to February 1st. I was doing the wrong month. March 1st to February 1st. So we have our own new little volume profile here. And we have this point of control right here. This has already been tapped. Ooh, has it though? No. Well, is this a part? Oh, this is March 2nd, and it was already up here. So this is already not naked, this point of control here. The value area high is up here. Technically, this would be considered a naked value area high at 44,758. Again, relative to the time frame, how important is it that we get back there? I do think we actually do get back there pretty soon, because I did this earlier today. I want to pull up, actually, yeah, no, just keep the chart there. I want to pull up the previous months, not just this one. So let's go February 1st to January 1st. I believe the point of control is like the same spot, right? Or no, the value area high is the same spot, not the point of control. So the value area high is in the exact. It's a little hard to tell because it's tiny little squares. But the value area high actually lined up 2 months in a row. That gives a lot of confluence to this line. Point of controls are different, and in my opinion, both of these point of controls are not naked. They've both been tapped. But the fact that this value area high is nearly the same, probably is the same. It's just hard to draw a perfect line on these dark and light colors. Tells me that there's a ton of confluence here. This has been respected quite a lot. So when we take a look at what's possibly going to happen if we get up this high, and I think we do get up this high. Not like this. We're probably going to do something like that. We'll probably wick above it. I don't think we'll get higher than this wick here. I do think we might get higher than this wick here, and then come back all the way, all the way down here. Why do I think we're going to do that? Well, I don't see a spike in volume yet, right? Remember how I said you can tell we're about to leave a range because of a spike in volume? We're not seeing that. We're seeing this still, and we're reaching this side, and there's no spike in volume. So unless we get a crazy spike of volume right here, I very highly doubt we're ready to leave this range. What I think is going to happen, I think we're going to come up here, and I think we're going to come back down. So keep that in the back of your head, I guess. Do your own research, not a financial advisor. But I do think this line is going to hold. We may wick past it. I do not think we go through it. I don't think we're up here. I don't think we're ready to go up here yet. I think we may actually break down out of this range. I think let's actually do the volume profile for this entire range. We can just leave this mess here, I guess. Oh, that's not what I hit. I hit delete. Let's do the volume profile for this whole range. We have here, we'll just do it to here. Value area high is 42,308. Value area low, which has barely been touched, is 35,821. And our point of control is around where all this stuff was happening. Which makes sense. A lot of the action was here, right? So why do I think we're going back down here? Because there's so little volume down here, I think this needs to get filled. We have so much volume up here. We spent so much time up here. So I think we need to do kind of like this guy. And then I think we're going to print some nasty red candles down to here. Of course, the range low is 33. So we may do kind of like this kind of guy here. This may end up happening like this, right? I actually have 31 marked on my TA chart as the bottom of all of this mess that we've been in, right? Lately, I think that we get there. But of course, we're not going to really know until this stuff develops. It's very possible that we just kind of do this thing and then moon, right? That's possible. I do think we're going to go down here. I actually want us to go down here because I think if we go down here, we can go really high. But that remains to be seen. I wouldn't be trying to short this. That would be, all of the trades that you could have made in the time that you were shorting this one trade, you'd lose money. It's plain and simple. You may think that this is the way to go. It's not, in my opinion. So now we've done the monthly, done the yearly. Now let's do the weekly. Actually, let me clear this. Let me clear all this. I'll be right back. All right, now we're going to do the weekly. Obviously, we're in the middle of a week now, so we're not going to do that week. Let's see, what is the 18th? So we want to do Monday to Monday, so 14th to 17th. So we have the 14th to the 7th. 7th, sorry, not the 17th. So there's one weekly. Now we want to do the 7th to the 1st. No, to the 28th. There's one weekly. That's as far as we need to go. All right, so we technically have ourselves a naked weekly POC up here in this range right here. We're going to do a little bit more looking into this and why I don't put a lot of validity into this. But technically, this is a naked weekly POC. So the thought process is we need to tap this, right? Has to tap this. I am of the opinion that if we don't tap it right away, it's not valid. Now, it's not to say that we don't get there, right? Price is going to get there eventually. Even if we go all the way down to 31K right now, price is eventually going to return to 43,800. And then there's people out there that would be like, Zix, told ya, we got there, told ya, it's naked, it's got to get recovered, dee-doo. Yeah, what, 6 months later? Come on. So, if it doesn't tap it right away, I don't put validity in. I don't trade it. And I don't suggest you trade it either. It's okay to keep it there as a level, but to sit there and this whole week be looking to long to it, you're going to be missing out on so many other trades just looking to long to reach this stupid naked that means nothing. It really means nothing. So that's where I'm going with that. Let's actually, I want to dive a little deeper into this range here, where most of this weekly resides. Where is it? It's not that. Is it? Is that it? What is going on with my chart? It's not showing it. Where's the rate? Where's the rate? All right, I'll just draw another one, I guess. I'll just draw another one. Can we draw another one? No. There it is. How weird. Okay, so we have a naked weekly, right? What happens if we draw one on just the range? Take a look at the range. That is where the price would be returning to, and see what that looks like. Remember, we're not going to include the candle that brought us in, which is this one. We're not going to include the candle that brought us out, which is this one. So we're going to start here, go to here. Now I got to remove this because you can't see it. POC is technically on the same line, not a big surprise. But look where it ends. It ends right there. This ended here. I wouldn't call this naked. In my opinion, this is not naked. So if the other one's naked, why isn't this one? Well, why are we not considering the volume that is where the range of instead of the weekly? That's just me personally. You do you. I know a lot of people might argue with me on that, but even if this was a naked range, we had 1, 2, 3, 4, probably another one, 5 more ranges, and by then almost an entire month. At what point is this volume not important anymore? I mean, this is a distribution pattern, right? This is people selling. That's what this is. Selling to drop the price. And then this is accumulating to raise the price. This is selling to drop the price. This is accumulating to raise the price. At what point is this not relevant anymore? When? A year from now? So I don't like to trust these numbers. Again, if you want to keep this as a level on your chart, as a possible spot to set a take profit, that's fine. But don't be trying to get there with every single trade. If you're long right now and this continues here, absolutely consider it. I would be making a stop loss. I would want to see this, and I would want to set my stop on this. That's how I do that. I'm not looking to TP there because I'm going to be. For me, I would have a stop here, and I would have a stop probably here as price goes through and creates support on these lines that I think will create support. These are just roughly drawn, by the way. Don't use these levels. These are not actual levels. This is roughly drawn stuff for an example. I'm looking for support lines, and I don't actually look to take profit. I look to set stop loss in profit. And I don't care if the price does this and then drops back down in a big wick, and then I take profit here. I don't care. I don't care that I missed out on this. Doesn't matter to me. All that matters to me is a positive green trade. And that's a part of the reason why I'm 90% on my trades. Why I fail very little, because I'm not greedy. I don't need the big win. The greedy people will ride it all the way up here, and then when it comes back here, let's say their entry's right here, it comes back here, they're not taking profit because, well, I could have took profit all the way up there and I would have made so much money. Maybe the price goes back and then it goes here. Well, I could have took profit here, right? And then I would have made 20%. Now I'm only at 10%, but I think the price will go back to that 20%, so I'll wait. Then the price goes here. Well, shit, I'm not in this trade to make $5. I'm gonna stay in this trade because I want this to go back up. You know, it could go back up here, and then it goes here, and I'm like, oh man, now I'm negative. Now what am I gonna do? Oh man, and then it goes here, and then they just lost. They're out. They're done. They're done with the trade, and then they close their futures account, and they're done. So that's how I use these levels. All right, I'm injecting this part into the video because I kind of skipped it. I had it down on my notes and I skipped it, and I was just running through my outline. I saw that I skipped it. Previous day, naked point of control. We skipped that completely. So we're going to look at the past couple of previous days, and we're going to analyze them a little bit. Obviously, this is the 18th, so we're not going to include that, but we're going to do the 18th from 1, just like we did the 1st of January to the 1st of February. 18 March 22nd, 1 to 17 March 22nd, 1. We're going to draw it out. We're going to do the next couple of days, and then we're going to see what the price is doing. So the first hour to the first hour, again, for the 16th. And we're going to do the first hour to the first hour again for the 15th. And maybe one more day back, and then we'll call it. It'll be enough. It'll be enough. One more. 1 o'clock to 1 o'clock a.m. for those that live in America. So, the theory is that the price will always return to the previous day's point of control. That is the theory. I think that price was always going to do that anyway because the crypto is highly volatile, and when it doesn't work, the excuse is it doesn't work every time. If it doesn't work every time, it's not tradable. So in my opinion, I don't put a lot of weight on this. I know it's not a popular opinion. I would rather know what the point of control of the range is, not these, random dailies. Because already I can see a naked one here that was not recovered. I know if we go back, we'll probably see some that have been. And I guess this has right here, and I guess if you want to call it blasting through it as recovering it, sure. I guess that has too. Then we have this one, and once again, we have our previous day's point of control. Actually, it looks like we wicked through it right away. Was this the day? This was technically the next day, and we're already through it, and then this candle's on it, so I don't think this one was ever even naked. I mean, let's go back. These are not really good examples. Let's go back a couple more days here. You'll see. Here's a naked point of control that was not recovered. So this is going to be another example. So some people will put this on their chart, right? Boop. And they'll just leave it here. And they'll say, we're going to go down. Why are we going to go down? Because there's a naked point of control down there. There's a naked point of control at, we'll just call it 38,000. We're going to go there. Eventually. Probably. Yeah, I do think we're going to go all the way up here. And then we're going to come all the way down here. So yeah, we're going to go through it. But at what point was it not because of this, right? At what point was it just because that's where price was going to go anyway? Although we are seeing some signs of weakness, we could technically come down here. Now, if it comes down here and it just barely touches it with a long wick and then bounces back up, you know what? I'll give you some validity there. I'm not seeing it do that. Are you seeing it do that anywhere on this chart? No. Now, gold, maybe if you're not trading crypto, something Forex, maybe that kind of stuff. I don't do a lot of that stuff, and I won't do it on my channel because this is a crypto channel. But if you're trading those sorts of things, I can see where these point of controls can make a lot of sense, right? Because there's a lot more heavy algo trading, a lot more heavy bot trading, and a lot of those types of programs are designed to target the points of control for reversals. So what they end up doing is making the price do it, right? So it's not going there, but only because it's being pushed there, in my opinion. I could be wrong. You could disagree with me. By all means, disagree with me in the description below. I sound like I'm angry. I'm not angry. I don't like it when someone just says over and 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 over. There's a naked daily out there. There's a naked daily out there. There's a naked daily. We haven't tapped that naked daily yet. Especially when that naked daily is within a range like this, right? You're talking about a low in a value area low that was barely touched down here. There's so much more in the point of control, and there's so much more higher peaks in over the value area high, because the value area high is all the way down here. So it tapped it more than the low did. So I don't understand that philosophy personally. It's not tradable by any stretch of the means. Maybe you could preset an order at it, but again, I'm not doing that. I mean, look back. Try to get it when I had the other one up. Boy, I mess around on these charts quite a bit, don't I? There we go. If you're preset an order, I mean, look at all this stuff past these orders. And this one's the naked one. You would have preset an order here and it's still sitting there 5 days later. 4 days later, 3 days later. But then this one here, you're presetting an order here. I mean, what's that? This is wave. This is a wave. So I don't get it. And you already would have been negative right away. Of course, it wouldn't have been terrible. But I mean, this isn't huge. This is just trading in a range, just like you would have been doing. You would have been doing that already, because this is a range here, right? So you're going to be setting up your volume profile. An argument can be made for that, right? Well, probably not up here. This is probably out of this range, but either way, you have your value area high right here. I mean, that's what you're trading, not the previous day's point of control. You're trading the value area high at the current range you're in my opinion. So when you come back through, you can short that. It goes all the way to the point of control. That's a great trade. You set your profit on the point of control. That's a great trade, right? Once again, this one would have been tough. But then again, here's your confirmation entry here, all the way to the point of control, right? This one never really went through. This would have been a hard one to put an order on. But still doable, because you went up and then went down. So it would have been a small trade. But again, that would have worked. So this is what you're trading. In my opinion, this is what you're trading. You're not trading the previous day's point of control. You can, if that's what you want to do. I know a lot of people that do it. But I also know a lot of people that do it and they're sitting there with orders, right? Just waiting for it to happen. Well, it hasn't happened. Oh, too bad. All right. I think that's daily, right? Yeah, that's daily. If you want to have a 90% win rate like I do, I suggest you subscribe to the channel. I'm going to teach you all of the tips and tricks that I've learned along the way to give myself a success rate of 90%. And I want you guys to have it too. I will be doing everything on the channel. I am not going to hide any education behind a paywall, ever. I promise that. What I will hide behind a paywall are some signals that we have on our Discord server, linked in the description below. With those, however, this is a new channel, therefore a new Discord server. We have a great group of guys, a lot of smart people in there. Come on by, talk with us. We'll happy to answer any questions, even if they're how to do a certain exchange or whatever, or transfer crypto. Yeah, until we have 100 members, all the premium signals that we have that will eventually be behind a paywall are free. So if you're interested in something like that, come join us. But even once the premium membership begins, there will be some free signals as well, and they're mostly all hitting. So by all means, stop on by, subscribe. If I was able to help you, leave a like. If I wasn't, throw me a dislike. I don't care. And that, my friends, is going to do it for this episode. Thank you so very much for watching. Take it easy.